Hey guys, welcome back to the Crypto Explorer channel. Let's dive into some more Bitcoin liquidity pools today, specifically on the OP network. So I try to bring you this content covering all chains, at least these ones which are more popular. And OP, although it's not one which has the higher volume, it's still a blockchain with tremendous potential. A lot of people are bullish on it. Therefore, I think it's worth taking a look at into Bitcoin pools in it, and that's what we will be doing today. By the way, guys, the time window for us to accumulate, us the retail people, to accumulate Bitcoin, to stack Bitcoin, is growing shorter. With the ETFs and all of that, big institutional players coming into DeFi and starting to buying Bitcoin, the DeFi world is changing, guys, just because of that. I've been saying all this time, DeFi is inevitable. Traditional finance will inevitably have to integrate it, and Bitcoin, being the spearhead of DeFi, has already achieved that. Also Ethereum with the Ethereum ETFs and whatnot. But you know what? Let me stop ranting and let's start looking at these juicy Bitcoin pools on OP network. Again, there might be a strong chance that on other networks you'll find more profitable pools, but if you want to spread your risk through chains, and OP is a really legit network to go on and enjoy these LP pools. So let's take a look at what's trending here. The first spot paying 0.3% a day is the liquidity pool on Uniswap. Actually, all of these are on Uniswap v3, so it's the concentrated liquidity version. You'll need to take into consideration the fluctuation of prices in all of this, and you can just easily automate it with APERTURE Finance. So you can open a position on Uniswap v3. You don't need to use KRYSTAL, by the way. I'm not sure even if they are doing automation with OP network. I know on Arbitrum they are, but on OP I'm not sure about it. I haven't tried it, but you can always use APERTURE Finance, which I will link my tutorial down below, so you can follow those steps if you want to automate your liquidity pool positions with that one. If you want to use KRYSTAL, be my guest. I'll also leave you a link down below for you to use the application, and also for a video. So check the description if you want to see tutorials to start providing liquidity, etc., etc. Check that out, guys. So let's dive into the pools. Number one, wrap Bitcoin paired with USDC. 1% fee. CVL on this one, it's not that deep. It's under $40K, but it has been doing really well, paying 0.3% a day. And bear in mind, guys, this is not something, it's not a sprint, as I like to say, it's a marathon. Providing liquidity, it's a marathon. Tomorrow the APR can drop, this 0.3% can drop to 0.1 or 0.05, whatever. But in the long run, that's the whole point of providing liquidity. In the long run, I want to stack my Bitcoin, and all the fees that this position will generate, half are being paid in USDC, half are being paid in Bitcoin, but we can claim those at any point in time whenever we want and turn that USDC into Bitcoin. So this 0.3% a day can be easily swapped into 100% Bitcoin, which is my plan, by the way. I'm not saying you should do that same strategy. That's just my strategy. I know that Bitcoin has been outperforming fiat. It's not even, they're not even on the same league. And therefore, I trade my fiat, whatever fiat I get from these pools. It's a no-brainer to me. I turn it into Bitcoin. It's going to the Bitcoin bag, okay? So number two, we get Bitcoin also with USDC, again, Uniswap v3, and now the fee cost is 0.05%. So the APR is a bit lower, the TVL is a bit deeper, and usually these lower fee pairs will have higher volume, so expect this also to be higher than the 1% fees. I wouldn't be surprised if that would happen, but still, it's paying a really nice yield of 0.2% daily. So these are the latest results. Then we have the same pair, but the tokens in it are swapped. So the first is USDC, the second is wrapped Bitcoin. Fee range again is different, it's 0.3%, and it's paying roughly the same, 0.19% for the past day. Really juicy one again. But look at this one, then the TVL in this one is close to 500,000. We're getting to a spot where it's more interesting because, in my opinion, you can spread your risk through all of these different liquidity pools because this is not set in stone. It will not stick like that, these fees to TVL ratio. This will not be the same every day. They will fluctuate. So if you also distribute your assets through different pools, different ranges of fees, because you're not solely dependable on the performance of one pool, and they will have in themselves an average. So whenever one pool is a bit lower, the other can outperform that. You know what I mean, right? And in that note, let me mention this fourth pool, wrapped Bitcoin again with the USDC. Notice that it's on the same fee range than the other above, but the TVL here is much shallower. So if it would be me, if you're wondering, hey, what's the difference? What should I look out for? Well, go for the deeper TVL. If you're not in a position that you want to spread your risk through different pools, go with the one which has deeper TVL, because there's a couple of things that come into play when you're depositing in a pool with deeper TVL. Number one, the people doing the trades, they won't have huge slippage fluctuations, paying a higher fee whenever they want to swap. Because if that happens, some people might think, hey, I'm paying too high of a fee, I don't want to do this trade right now. And they will go, for example, elsewhere to another DEX, for example. While if you have a deeper TVL, you will notice, let's say if someone comes in with a big trade, the TVL will handle it much easier, therefore it won't impact slippage all that much, if anything at all. So when in doubt, go to higher or deeper TVL pools. Those tend to be much more reliable, okay? Now we have another stablecoin. Now this is the first stablecoin paired with Bitcoin, which is not USDC. This one is USDT. TVL is not all that deep, but it's still paying a nicely 0.17% a day. So if you're looking to another stablecoin other than USDC, this is an option. And then I'm gonna close this one up with the wrapped ETH and wrapped Bitcoin pair. I think this is a really good one. The biggest cryptocurrency assets right now, Bitcoin and Ethereum. You'll stack them both. The liquidity is plenty deep, over 2 millions right now. The volume for the past 24 hours has been higher than the TVL. The higher the better, but still, it's still higher than the TVL. So I like that. And it's paying a nice 0.07% a day. It might not seem all that much, especially if you go upper here on the rankings, because you see others paying 0.2, 0.3% a day. But we're looking at the long run. We're looking to stack Bitcoin. In this case, you might even want to stack both and not trade your Ethereum for Bitcoin. If you're a Bitcoin maxi, you're thinking, this guy is crazy, I'm gonna trade all that Ethereum for Bitcoin. Well, be my guest, you do you. I might also be doing the same. But yeah, I like both assets. I'm bringing you options, opportunities, and there's more down the line. But hey, I thought these were very well worth to share all these liquidity pools with Bitcoin. And although right now we're seeing this one paying 0.07%, in the future it might be higher. There's the same pool on Base. If you want to go and check that out, I mentioned it on my last video. It's paying over 0.5% a day right now. I just checked it, and it's also Ethereum paired with Bitcoin, but on Base chain. Okay guys, that one is performing also really well. That being said, if you enjoy this type of content, like, subscribe. If there's any questions you might have, drop them down below in the comments. Guys, thank you for watching. Let me know also which pools are you providing liquidity that have Bitcoin, or which are your favorite pools to provide liquidity as of now. I always like to share and talk about this information with you guys. Let's help one another. Let's share the info. Let's stack that Bitcoin. Thank you for watching, guys, and I'll see you on the next one.